to the bills aimed at overhauling Nigeria's complex, fragmented, and inefficient tax regime. The new statutes, the Nigeria Tax Act, Tax Administration Act, Nigeria Revenue Service Act, and Joint Revenue Board Act, form the cornerstone of the federal government's medium-term fiscal framework and tax policy agenda 2023 to 2026. Collectively referred to as the 2025 Tax Reform Acts, they are expected to take effect on the 1st of January 2026, unless otherwise specified. Tonight, Tuesday Live will examine the legal underpinnings, structural changes, substantive provisions, and the likely implications of these tax reforms on taxpayers, businesses, state governments, and the Nigerian economy. But before we get to meet our guests, let's get to see this report put together by correspondent Amaka O.
Lagos is said to be the commercial hub of Nigeria, with over 50 million informal businesses operating across the state, according to reports from the Small and Medium Enterprises Development Agency of Nigeria, SMEDAN. Industry players within the tax ecosystem have identified the well-crafted 4 tax laws established by the present administration as a stimulant that will propel the expansion of medium and small-scale enterprises.
If you have a business, and before now, if you, like for instance, I give you an instance, a gentleman who's into piggery says that he pays tax on the number of pigs that he had to some villagers. He pays tax when the pigs are slaughtered and are taken to the market. He pays taxes when this is the market, he pays taxes. Different form of nuisance tax. All of that has been eradicated under this new tax bill. So I want to tell small business owners that the reason why you have not been formalizing your business because of these taxes is now a new day.
So tax ombudsman will bring new lease of life into how small businesses are supported in defending their rights. And at the end of the day, the fiscal landscape will be better off. The reform aligns with the best principles of taxation, which are equity, certainty, convenience, and administrative efficiency.
Tax consultant and experts say the 6 months window period for implementation of the new tax code is projected to attract 5% growth into the Nigerian economy by the year 2026.
Great news for the country. And I mean, Lagos, of course, is the commercial hub of Nigeria. And you're asking about, will it increase entrepreneurship? Yeah, I think it will, but it will also make it easier for large companies. I mean, the large companies that we think about, and consumer good companies or oil and gas companies, that they're in a better tax environment. So it's great news for the country, and all credit to the administration and to Taiwo. And of course, Taiwo, someone I think at 50 can really celebrate the impact he's having on one of the largest countries in the world in a positive sense.
And also the suspension of operation of the acts to 1st of January 2026 is ideal because this is mid-year. There is a running budget, and also tax compliance duties and business planning, tax plan is on annual basis. So the commencement of the act in January 2026 is well thought out.
The present harmonization and exemptions contained in the tax laws, experts say, will stem the tide of varying issues such as tax evasion, multiplicity in taxes, will improve accountability and expand the revenue base of the nation. In Lagos, Amaka O.
All right, that report sets the tone for tonight's discussion. Let's get to meet our guests. I would like to welcome to this program Kelvin Emmanuel, an economist, is a member of the Presidential Fiscal Policy and Tax Reform Committee. Thanks for being with us.
Yeah, thank you so much for having me.
Right. We're also joined by Uche Uwaleke, Professor of Capital Market at the Nasarawa State University, KEFI, and President, Capital Market Academics in Nigeria. Prof, thanks for being here.
Thank you so much. My pleasure.
And let me also welcome Professor Ken Ife, Development Economist and Global Consultant. Thanks for being here.
Thank you for having me.
Right. And joining us from our Lagos studio is Professor Franklin Nemeka Ungu is an economist, chartered risk manager, and professor of strategic management and governance at the Lagos Business School. Thanks for being with us tonight. All right. So it's all about those 4 bills that have been signed into law, the tax reforms. But let's start off by getting a brief summary of the 4 tax laws signed by the President. Give us an insight into them.
So, one of the issues that the Nigerian government has always had is revenue mobilization, capital formation, GDP to tax to GDP ratio, revenue to GDP ratio is a concern. Even in 2025 Appropriation Act, it's a concern. Capital expenditure has missed significantly, which was the reason why the National Assembly has extended the implementation period from June to December 2025. And what this tax bill has done is that no longer will the Nigerian Revenue Service depend on the taxpayers and their consultants to tell the service what they earned. So the Nigerian Revenue Service is going to deploy artificial intelligence to be able to gather information on taxpayers and present that data to the taxpayers to stem the tide of tax evasion, which has been a very common practice before this came into law, even if there's a sunset period until January of 2026. And it's also going to, remove nuisance taxes. There are so many nuisance taxes in Nigeria. When the committee was working, it was realized that in River State, for example, they had up to 94 different taxes and levies that businesses were paying. And if you take a poll of different states in Nigeria, you see that an average state has up to 30 different taxes and levies that they were paying. So what this tax bill has done is that it's consolidated all the taxes, it's harmonized it. It's also harmonized the revenue collection functions of quite a number of MDAs to a central collection at the Nigerian Revenue Service. So definitely, from 2026, you're going to see an improved tax to GDP ratio, and I'm expecting that by between now and 2027, we're going to see that tax to GDP ratio creep up to anywhere between 14 and 15%, and get to between 18 and 20% by 2030, which is very good. And the reason why this is very good is because a few years ago, you had a system where the government fell so short in revenue mobilization and capital formation that they had to go to Section 38, which was Ways and Means, which was gathering public sector CRR, private sector CRR from banks, and also quantitative easing or printing of money. And you see that about $53 billion was raised, which led to the collapse of the Naira, devaluation of the Naira. It led to black market premium. So what this is going to do is going to mobilize revenue, is going to reduce the tendency of the government to tap into that window, which it has tapped. And it's the reason why, for example, the cash reserve ratio today in Nigeria is about 50%, which means that 50 kobo of every 1 Naira deposited in the Nigerian bank is actually warehoused at the Central Bank of Nigeria. So this is going to ensure that there are stricter fiscal rules and that the government has more revenue and it relies less on debt to fund its budget.
Quite a number of things we see in these acts, and one of them I want to refer to, and that's because people always ask, what's in the name, the nomenclature? What we knew as the Federal Inland Revenue Service would become the Nigerian Revenue Service, NRS. And what's the difference? What could it not do as FIRS that it will now do as NRS? That's on one point. And I also refer to the current Joint Tax Board, which of course also there's an act that takes care of that as well. So the basic question which laymen like us would ask is, what was it other than the current, since this is taking effect from the 1st of January, the current tax administration system that these organs couldn't do that these ones would now do from 1st January? Prof, would like to go at that.
Okay, thank you. Yeah, thank you so much. Well, if you recall, the Federal Inland Revenue Service was established, by an act. And in the act, you will find the name Federal Inland Revenue Service with defined functions and mandates. Okay? As we speak, the Federal Inland Revenue Service does not collect, for example, import VAT. The Federal Inland Revenue Service collects VAT, companies' income tax, petroleum, income tax, personal income tax with respect to residents of the military, for example, and then those in ambassadors and so on. So they have defined functions and mandates. The customs, collects the import VAT. You have also other revenues that are collected by other agencies like NIMASA, Nigerian Port Authority. These revenues are not currently collected by the Federal Inland Revenue Service. So there was a need to also have a different body, because if you are going to expand the mandate, you will need, particularly when you want to structure the service in line with, or you want to model it after, what's obtained in some other countries like the UK, for example, like even India. In the UK, you have Her Majesty's, Revenue Service and Customs. You needed to also, change the name, then expand the mandate to now become a central collecting point. So what we intend to see going forward is that the Nigerian Revenue Service will now be collecting all those revenues that are hitherto being collected by these other agencies. And one thing it does is that it will plug leakages. It will also remove, overlap. I just give an instance where for one single tax item like VAT, you have two different, bodies collecting them. So that can give room to, some leakages. By centralizing them, you are plugging the leakages. You are even improving collection efficiency, in a way, because if you want to digitalize, for example, you are spending on digitalization, with respect to that, that collecting agent. So I think it's better for Nigeria to have that central collecting agency. Of course, it also comes with its own challenges, bureaucracy and all of that, which is also why I'm happy we're having this window. This window will create an opportunity for even the Revenue Service, recognizing its mandate, its expanded mandate, to invest more this time in infrastructure upgrade, IT facilities, training and retraining of their staff, possibly, engaging, more hands, and also putting in place a lot of internal control systems, that will ensure that the Revenue Service functions as intended.
I was just going to add to what Prof said, with a very beautiful point he made. If you recall, a few years ago, River State has sued the federal government and said that the states are to collect VAT. And Lagos State government joined, Oyo State government joined in that suit, and I think it went up to the Supreme Court. Yeah. The option of the states going to the Supreme Court and winning that case and domiciling the VAT collection function at the states was not an option that was viable, because the states don't have the wherewithal to be able to collect VAT the way the Federal Inland Revenue Service was collecting VAT. So the fact that it's been consolidated, so for example, what the committee had proposed was, it had proposed 50% attribution, it had proposed 20% equality of states and 30% population. But when the rubber hit the road, those were the proposals, the contentious issues. It came to 50% equality of states, 20% population, 30% attribution. Right? The fact that we have a situation where the issue of the states contending to collect VAT for themselves has been laid to rest, it's a win. It's a win, because if the states go to the Supreme Court and they win the case at the Supreme Court, and the states now have the authority to collect VATs for themselves, they won't be able to raise as much revenue like the Federal Inland Revenue Service, as now Nigerian Revenue Service is raising from the collection of VAT. Now, you can see that the federal government has stepped its own share of that collection to 10%.
From 15%.
From 15%. And the states and local governments has more share. And something that the committee has done extensively, which there's not been a lot of light on it, is on local government autonomy and reforms, developing a fiscal framework for local government autonomy, because as you see this kick into effect, you see a higher share of this money go to local governments across Nigeria. The question is there a fiscal framework for local governments to manage it, the resources that they are getting? Is there a process of accountability for them? So this is very important, because, the conversation always focuses on, just the tax reforms, and it doesn't focus on the fact that the committee has the mandate of fiscal policy and tax reforms. And the committee did extensive work on fiscal reforms, especially as it regards to local government autonomy and setting up those frameworks for management and accountability.
Okay, we'll return to that and examine it in greater detail. But let's go to the other side of it, which I'd like to refer to as the popular side, that deals with taxation, income tax. And one of the things is those earning less than 800,000 naira annually being exempt from paying tax. Now, initially, when these bills were still being proposed, it was one of the provisions that a lot of people commented on. They said, look, wouldn't this amount to, giving with the right and taking away with the left? Because they're looking at other forms of revenue collection, the question of VAT, which of course, those who are earning such low figures, they would purchase goods and they might have to pay more for those. But let's look at what's the advantage of that.
Yeah, well, it is when you see 800,000, it sounds more like 70,000 times 12 months, so it's not too far from that. So it's actually part of a scheme to protect the weakest in the salary spectrum. But I think there's even more, because there is something about a tax that actually allows or incentivizes transition from informal to formal. When they said if you are registered for NIN and then your rent is 200,000, you have an exemption. So you're actually encouraging people to register for NIN and then draw them into the net, because that is one way. But I think Lagos State has an even more creative way of dealing with their own, using their voluntary tax assessment. But having said that, there are other positive things that resonated with that spectrum. When you look at social economic impact of this bill on two major constituencies. The two constituencies are the 230 million Nigerians in general and the working population. That is those working population. And then on the other hand, the 42 million MSMEs are actually impacted seriously by the bill. And how I could see the bill likely to increase growth rates and economic, GDP rates, because if you look at the construct of GDP, there are four constructs there. You have household consumption, which looks at the citizens, and is about 84% of GDP. Then you have investments that tends to come from the business sector, MSMEs and all that. And then you see, then the third one, of course, is government expenditure. It keeps rising because we are borrowing money. But the fourth one is the transition from negative balance of payment to positive balance of payment because of the removal of subsidy, fuel subsidy. So you now have plus $6.8 billion. So that's positive. Now, all of these four are actually going to go up. See, when you have removed the VAT and all that from health bill, education bill, and then VAT on food, all of that, you're actually conserving more money, increasing the disposable income with the citizens. So they are going to now buy more products. So aggregate demand would increase, and that's GDP is going up. And when you come to the MSMEs and say, don't worry about tax, let's calm down, we're moving it from 25 to 50, they are retaining more of their income, and then they are able to stop redundancy, increase more workforce, and then invest more in productive activity. That aggregate production goes up, output. So in all of these cases, GDP is going to go up, without a doubt. And then the pressure on those in the lowest is reduced. Remember, there's also 30% of all those low-income people are actually completely exempted from the tax. So I see that as a big plus. But there's so many more things about this bill that makes it extremely attractive. I understand. You see, there are three things happening in the country. One is that if you look at the 42 million MSMEs, that is 48% of Africa, 90 million Africa population, MSME, who are 48%. So we're actually punching beyond our weight, 15% of GDP of Africa, 18% of population. But here, on entrepreneurship, you are 48%. So entrepreneurship is a latent comparative advantage for Nigeria. So if you can do anything positive for this population, then your economy will go completely overboard, if you know what I mean. So it's very important. But there's a trust deficit. Even when the committee, your committee, try to placate the people who are actually generating the wealth to give them more, there's still the trust deficit. Means people don't even trust, they don't know what you are doing, they don't trust you. So these 6 months will be, the job in these 6 months is to go sensitization. You have to go out, because there's a reasonable interval between enactment and going into force. That's the standard Bundesliga law. You got to go out and talk to people. If you don't talk to people, we're going to have a big fight by January. People need to know. Give them templates of how to prepare. That you have to talk to people, go out there so that they understand what you are doing. And you know why AFCTA had problem for 1 year? It was because people didn't know what magic was concocted. So they said, no, stop. And then they had to take 1 year to go around and sensitize people so that they will understand and buy in. So he ended up, the pushback was expected to come from Lagos. The revenue was going to drop because much of the things. But then it's the other way around. And then it all pointed to the distrust, and then it pointed to the need for more communication and sensitization.
All right, thanks. We'll come back to it. But let's go back to our Lagos studio and Professor Franklin Ngu. What do you make of all of this? Just as Professor Ife was rounding off, he talked about the trust deficit, where some states felt the whole thing would lead to a drop in their revenues. But in actual sense, as we say now, it's the reverse is the case. So what are your thoughts on all of this?
I think I totally agree with Professor Ken and even what Professor Waleke and Kevin said. I mean, the tax bill is a good one. I mean, the components, they're all very, very good. However, remember that Nigeria, we are very good in documentation, in formulation. The key challenge, which relates to what Professor Ken talked about with regards to trust deficit, is the implementation, the execution of the bills. So that relates also to the key governance indicators, which will help in terms of the execution, and also in terms of the relationship between the states and the federal government, and also local government. So if you look at the key governance indicators in Nigeria, we are not doing well. I'm talking about World Bank governance indicators like rule of law, government effectiveness, regulatory quality, accountability, and all that. So historically, we've not done well. We've been negative in all these key variables. So the question then is, with these good or excellent tax bills that have been signed into law, the question is, how do we ensure effective implementation, which goes to government effectiveness, which goes to rule of law, and which goes to regulatory quality. So, and of course, people don't really believe or don't have trust that the government do things properly. And of course, when they relate it to other aspects of governance, in terms of, for example, policing, in terms of judiciary, in terms of electoral issues, in terms of education, in terms of even the tax administration at the moment, they begin, of course, there are doubts that some of these things are not properly done. And if they're not properly done, then the question is, how will they believe that these new tax bills will be different from what is already going on in the country, what is dominant in the country in terms of the trust deficit that exists? So, of course, they will say maybe this one is a new one, but we cannot isolate it from the environment in which we operate, because they say context is very, very, very important. If, for instance, we are implementing the tax bills in a country or a society where the key governance indicators are doing very well, of course, we will not have issues. But if it's in Nigeria with all these issues, it's a big problem. So in addition to sensitization, in addition to good advocacy, in addition to engaging the different stakeholders, there is also the need to appreciate that these tax bills will have to work in the context called Nigeria. And the issue then is, how do we ensure that the other key complementary or related factors, like, for example, execution, police, judiciary, as I say, rule of law generally, that we up the game in ensuring that things are done properly generally in the governance of the federal government, in states, and in local governments. Another big issue that we need to take into consideration is, now that all the tax issues are being consolidated, how do we ensure that the states and local governments will properly collaborate with the federal government to ensure effective implementation? The reason why I say this is that if we look at what is going on in the solid minerals, I remember in Lagos Business School, we invited the Minister of Solid Minerals, the last one, and he told us that what we have in the solid mineral space is significantly higher than what we have in oil and gas. However, the resources, we are not exploiting, we are not benefiting much from solid minerals because of the way it's been, because the solid minerals is in an exclusive list. And there's a big issue between the federal government and the state government, the subnationals, in ensuring harmonious exploitation of these resources. So we need to look at how do we ensure good relationship or collaboration between the federal government and the state government. So, example, if you paid your tax, you might go to the states and they might still, there are some non-state actors or even quasi-state actors, maybe people are enabled or people are empowered, that might call themselves consultants. That might still bill you, but they might not refer it as tax. So these are issues that we have to look into to ensure that what has been formulated or what has been signed into law really benefit Nigeria and really lead to what Professor Ken was talking about in terms of the way it's going to increase aggregate demand, aggregate consumption, GDP, and all that. So I think those are my initial thoughts with regards to the way things should go.
Okay, thank you so much. We'll return to you in just a moment. Back here in Abuja, yes, those earning below 800,000 will be exempted from tax. But there's also the 25% personal income tax, which applies only to those individuals earning 50 million annually. How would that play out?
So, you know, that personal income tax is not like a one-size-fits-all tax rate. It's a tiered system that says as you go up the income ladder, the taxes reduce, right? And it has a band, a threshold, a lower and upper band of between, I think, 18 or 19% and 24.8, 25%, right? So there is no luxury tax in this bill, and people are not punished for being rich. And the poor people, people who have lesser means, are also not punished for being poor. Because one of the misconceptions we had earlier was that people felt like their tax rate was going to go up.
Yes, but it would seem that a luxury tax would be desirable.
So you don't want to create a system where the 1% of the 1% feel like they're being punished for being rich.
Okay.
Right? You also don't want to create a system where they are not taxed fairly and they don't contribute their fair share. So the issue that Professor Ugu in Lagos Studio raised, for example, on how will you implement it across the federating units, bringing luxury and bringing in consultants and not having proper enforcement framework. It was addressed in this tax act. It was addressed, and you see that authorities at the federating units, especially at the local governments that constitute most of the nuisance taxes, they get to pay a penalty that will be deducted at source if they fail to enforce the act that says the nuisance taxes are off. And businesses cannot be taxed at the local government level by non-state actors. So, for example, your normal allocation will be debited to pay and reconcile for you failing to enforce the removal of nuisance taxes. So, as regards the personal income tax, it's important for us to make the clarification that the poor are not being punished for being poor. The rich are also not being punished for being rich. Everybody must pay their fair share. It's a progressive and tiered tax system that is fair and that you can benchmark across the world.
This does mean, well, on the one hand, you're not increasing taxes, but you hope to gather more.
You're expanding the tax net to bring in more people into the system and educate them on the need for them to contribute their fair share. So for example, on the CIT, for example, there was a huge debate, between the state governments and the beneficiaries of development levy. On the committee wanted to keep a corporate income tax rate that when you add the 4% development levy, it equals to 30%. And there was a huge debate on, no, we'll keep the corporate income tax rate at 30% and add the development tax levy at 4%, right? And then the 4% development levy will be shared amongst several beneficiaries in government. You have 50% that goes to the Tertiary Education Trust Fund. And you have 15% that goes to NEL Fund. I think Defense Infrastructure Fund takes about 8%.
There's a lot
cascades
of them.
like that.
2%, 3%.
Exactly.
Will split up.
So it's important to realize that in the preparation of the tax bills and the rigorous debate that it went through every single fiber of Nigeria, there were benchmarks for global best practices.
Okay.
Can I come in?
Yes, Prof.
Yeah, thank you so much. Permit me to share, to say this, that I just returned from an international conference on tax reforms. It was held in Spain, and I was invited to come and share Nigeria's experience on these tax reforms. And I want to say here that that conference, that event attracted participants from all over the world. And it would seem that a number of them are interested in the this current tax reforms going on in Nigeria. And that's because you notice that the reforms in Nigeria are all geared towards making the current tax system a lot more progressive. Because when you make a tax system more progressive and fair, okay, it becomes equitable. And to that extent, you can now begin to see how we can also use that to link that to service delivery and deliver dividends of democracy, as it were. So what are those things that are in these tax laws today that would make the tax system more progressive? First is the issue of personal income tax, which we have mentioned. Right. If you say the way it's been graduated now, currently, even if you're earning 1 naira today, you're subjected to tax. Because the first 300,000 naira of your income is taxed at 7%. Okay? The next 300,000 to 600,000 is taxed at 11%. So you have that bracket. The highest marginal bracket today is 24% for those earning above 3.2 million. That's the current rate. Now, the tax law has now introduced a tax exemption threshold, okay, for those with 800 naira below. So if you're earning 800 naira below, no more tax. So you only start paying tax when you have 801 up to 3 million. That's when your first tax at 15%. The marginal tax bracket now has been increased from 24 to 25%. The whole idea is to shift the burden of taxation from the low-income earners to the high-income earners. That's for personal income tax. For companies' income tax, the same thing. You also see some level of progressivity. Today, if a company makes loss, the company is taxed because you are required to pay, even as on your loss, you are required to pay 0.5% of your turnover as tax, even when you have made a loss. Whereas taxes shouldn't be on losses. And that's why you often hear the president when, you heard him say in a number of occasions that the tax system should be such that seeds shouldn't be taxed. But what should be taxed rather should be fruits, not seeds. So a situation in which we are taxing losses, okay, as we currently have it, is not ideal. So what this new one has done now is to abolish that. So no more minimum tax for companies, whether or not you're making profit. Now, the exemption threshold again for small, currently we have, you're either a small company, okay, where you don't pay tax under the Finance Act, or if your turnover is between 20 million to 100 million, you pay 20% tax. Okay, if it's above 100 million, you now pay 30%, tax. But currently, that tier structure has collapsed just to 2. The problem with the current one is that if your turnover is 25 million naira as a small company, you're paying 20% tax. And if your turnover is 99 million, you're also paying the same thing. So it's unfair. So right now, if your turnover is below, the threshold was moved from 25 million to 50 million and much later to 100 million. So if it's below 100 million, you're not paying tax as a small company. Okay, it's only when your money is above that you're expected to pay. So again, you notice that it is progressive. All right? Now, you're not paying tax, but you are also required to file tax return. And that's one way the government intends to also formalize the huge informal sector we have. Even though you're exempted from tax, but you need to file, give us some records so that we can have your data. And one advantage that we'll have is that in future when government wants to intervene, wants to give things to small business, it has a record, that you can use to do that. So the summary of what I'm saying is that the new tax laws have made our tax system a lot more progressive. Okay, today you can say they're fair, they're equitable, unlike what we used to have. The same thing with the value-added tax. Okay, the VAT, of course, the rate was not increased, retained at 7.5%. Okay, VAT. And the good thing about the VAT now, the new one, is that for essential items such as food, medical services, pharmaceutical, even electricity, those have now been zero rated. They now have 0% VAT. Currently, they are exempt. Food is under exempt, VAT exempt currently. But the new tax says, instead of saying VAT exempt, say it has 0% VAT. There's a difference between when you exempt an item.
Well, that's the thing. If we were to go into semantics, what's the difference between exempt and zero rated?
Thank you. It's important the public understands that. When you exempt an item from VAT, okay, it means that VAT will not be charged on that item.
Okay.
So if you are selling food, no VAT will be charged. But if you are the one selling food and you have made purchases to be able to sell the food, remember you paid input VAT. You must have paid VAT. You are now selling, no VAT is charged. And you cannot recover the one you have paid. But when you zero rate it, when you say 0% VAT, so you sell, we say, okay, your VAT is 0%, again, no VAT. But because you are under VAT, you are VATable, you can recover your input VAT. So it's better for the person now doing food, doing medicine, doing essential items. So the situation now is better than the new law, than what we currently have. Under the current system, most people don't recover their input VAT on purchases. Okay? But right now, tax credits, has been guaranteed. If you have paid input VAT, you can recover that. Another thing maybe I will also want to mention is the bill, the law on the Joint Revenue Board,
yes,
which also establishes the Tax Appeal Tribunal and the Office of the Ombudsman. Again, people don't know the difference between Office of the Ombudsman and the Tax Appeal Tribunal. Okay? So today, if you have a wrong assessment by the tax authority, or a penalty is served, you serve the penalty, you can challenge, go to the tax appeal, because we already have it, Tax Appeal Tribunal. And of course, it's a quasi-court. But if there is a case where you have a case with the tax authority, they just come and seal your office, they infringe on your rights, if that's not the kind of thing you go to the Tax Appeal Tribunal. You don't have anywhere to run to today when it's a case of, abuse of your rights by the tax authority. So, and that's what the role of the tax ombudsman will do. When you have such cases, it's the tax ombudsman that will now mediate and now help you resolve your issues with the tax authority. Okay, so that's why, as I said, the dispute resolution mechanism, generally has been strengthened, with this new law, and it also helps to boost confidence in the tax system.
All right. In addition to the discussions in the studio, we also have a couple of reports. This one is from Kanu.
The recent presidential assent of the new tax reforms into law marks a significant shift in Nigeria's fiscal and economic governance framework. These reforms are aimed at improving revenue generation, enhancing transparency, and strengthening the overall economic structure of the country. Experts in Kano describe the reforms as an opportunity to clean up outdated revenue collection methods, cut out inefficiencies, and embrace digital tax administration.
First, the state should make sure that it assists or it sets up the institutions at the state level that will work together with the federal institution to ensure that all the processes are streamlined and there is an improved compliance. That improved compliance is what is going to help generate much more, which will enable the state to get also much more.
Kano State will have no fear in terms of benefiting with this revenue that is going to be generated. And we know the tax report will be affected or going to be in use by 2026.
By fully adopting e-tax platforms integrated with the national identity number NIN, the experts believe Kano could significantly improve compliance and transparency, especially among informal sector earners who currently dominate the local economy. This can be achieved if the state government simplifies processes, educates citizens, and avoid over-enforcement that will stifle productivity, especially in rural areas.
Ensuring the rule of law in the state, ensuring peace and safety of lives and property, and coordinating to essentially educate the taxpayers will go a long way in making sure that our state, the most populous state, Kano, and other states will be able to get the benefit from population, from what is shared equally, and from what is based on the consumptions at the state level.
As Kano prepares to revise its internal tax policies to reflect the national law, the experts advise the state government to invest in capacity building for staff of the Kano State Internal Revenue Service, expand taxpayer education campaigns, and ensure inclusive stakeholder consultations, especially with market unions, transport associations, and youth groups. In Kano, Awal Salisu.
All right, the next report is from Enugu.
Taxation, no doubt, is a critical tool for economic development, which provides government with revenue to fund infrastructure, social programs, and public services in Nigeria. Tax reforms have been a central focus, aiming to streamline the country's tax system by reducing the number of taxes to a manageable single-digit figure. The recent passage of some tax reforms bills by the National Assembly and its assent by President Bola Tinubu signals new regime in tax administration, which hopes to enhance revenue generation, simplify compliance, procedures and address regional disparities. This noble initiative have been widely described as a welcome development by residents of Enugu, who are optimistic that it will create conducive environment for businesses and boost the country's economy.
When people comply with this, it also makes more money into the coffers of the government. So whichever way you look at it, critically, it is win-win for Nigerians. So for me, it is a right step in the ladder.
On this tax issue, sincerely, I will commend the president for taking a bold step, for having that what you call a political will. More investors will come because now our tax reform bill is now flexible. Not that you pay tax in Enugu, on getting to Lagos, some people will hold you in Lagos to pay the same tax. You go to Makurdi, the same thing, discouraging investors.
It is expected that the recent tax reforms bills passed into law will encourage production, thereby increasing the country's gross domestic product. In Enugu, Grace Chukuma.
Well, back here in Australia, there's something I've always wondered about, and now that we've talked about the appeal tribunal and the ombudsman, it is the matter of assessment, and that can be a contentious issue. How is this assessment being carried out? And how would these laws ensure that the assessment that has been done is appropriate?
Well, you know, this is why I kept saying that we have this 6 months interval within which to get out and tell people and show people and do templates. And you see, when Lagos is very different because they use automation. And apart from completely automating their tax collection system and removing all these middlemen, they actually did self-assessment. Go and assess yourself and then pay whatever you think is due. And then make that payment, the system issues the receipt. So, but then you do it for the first year, you do it for the second year, maybe in the third year, an officer will sit with you to do a review. And then they will go through what you have done. And one thing that they could do is that the system allows him to compare your business with another business, maybe just around the corner. And then you suddenly see that that same person with around the same turnover is actually paying 3 times more tax than you. So already you found yourself guilty, and then start thinking about how to pay up some more before you fall into the... Then you can also compare you to somebody else, the same thing you are doing in another area altogether, so that you can now see. And that is, first of all, you are sucking people into the tax net. 2, you are bringing voluntary compliance. And 4, they now admit, they learn more, and they start paying you more. Do you understand? So because you are always likely to downgrade yourself. But there are 2 issues that both Kevin and Prof. Franklin raised, which is about the deliveries part of these things, implementation. And I've been asked this question in many TV interviews. And I said, wait a minute. This deals with the framework for collecting the tax. It doesn't necessarily deal with the public finance management. Because public finance management is in another act, which is Fiscal Responsibility Act 2007. And that is where you will come to, because we are currently looking at domesticating it for local government. We have it for states. Only about 25 states have adopted, which is an error, because we should have, even when I looked at many other fiscal laws around the world, within a year, they forced the implementation at all levels. Within a year, 90% of them. But our own was left loose, let them do it voluntarily, and only 25 have done it today. And then also the ratios that are supposed to be set, we are allowed to, the law says the minister, finance minister, will advise the president in consultation with the assembly on the ratios. These ratios are like debt to GDP ratio for the federal, for the state, for the local government, then all the debt service to GDP. All of those 40%. Ratios. So only one ratio is in there, which is deficit to GDP, about 3%. I think they moved it to 4% now. That's the only one. But there are many other ratios. So these are issues. So in that law, that's where you have fiscal strategy paper. that looks at the budget parameters. And I keep telling the Minister for National Planning, you have to include a composite, a solid mineral composite. Because at the moment, we only look at crude, quantity and then price. I say, look, have a composite. If 5 minerals or 2 are most promising, then let's have a composite index for those 3. And then have it there so that we begin to monitor and begin to set targets. And then I also asked another one on, on ICT. Right. So that is number of, because when you have an ICT, because ICT is a proxy for the financial sector. Do you understand? It's a proxy for so the number of volumes of transaction. And Nigeria is number 3 in the world in volumes of transactions. So, and the government is collecting tax from that. Have one of it as one of the things so that you put pressure on the banking sector to continue to innovate, and then the bank, all these sectors. So these 3 will drive the economy because you are now coming down to give yourself higher targets and then push it. But that is not happening. So if you look more, so apart from that fiscal strategy, you have the MTEF, the medium-term expenditure framework, which is what deals with the budget. So the revenue you are bringing in enters into the budget frame. And then it has provisions for transparency at all levels, even during there, and even at the assembly when it goes to assembly. So all of that is where the wheel begins to drive. And then when you come to debt, which is where what consumes all our income, then it has clear rules about that. What you should borrow for, what you should not borrow for. You shouldn't, the tenure of the loan has to be long term, over 10 years, and there has to be concessionary rates or under this, the 3% or something, and then cost benefit analysis. And I haven't seen one. Okay. I haven't seen one.
I was going to, Prof, you made very, very important points. I was going to say that the key differentiator between the pre and post FIRS NRS is that we're moving from self-assessment to the taxman telling you your assessment based on intelligence gathering.
That's a key differentiator. Well, and that also will raise questions about, because it's a taxman who's telling you that this is what you're worth.
Yes. And he's giving you evidence to show that this is what you're worth.
Yes.
So, self-assessment has the risk of consultants layering it and, underestimating it as a way.
Let me also tell you one of the things in the Nigerian Tax Administration Act, one of the things you find there is that now individuals will now be required to have a tax identification card. Currently, a tax identification number is what is required for companies, opening bank accounts. But the new act is now saying, the new law is now saying, even for individuals, okay, the card will replace the number. So individuals will now be required to have card to be able to operate bank account. Yeah, so that's...
I was also going to respond to a very quick point that Prof made about adding solid minerals in the composite index for the fiscal strategy paper. If you look at what is going on in Ghana with the new finance minister, Kasi Fosen, and the fact that the Ghanaian government decided to centralize their gold mining proceeds to the Bank of Ghana, and the CD has appreciated from 13 to $1 to about 9 to $1.
50%.
Because there's been an increase in the amount of gold bullion at the Bank of Ghana to support the CDs.
And value addition.
And if you look at the crude oil price and the fact that the Naira is too exposed to the crude oil price, and crude oil price has been fluctuating, and you need a break-even of about $70 to $75, what Prof has said is very key. CBN several years ago started the presidential artisanal gold miners initiative
to buy off the gold.
To buy off the gold. But that has not happened. So you need like a diversification.
Imagine if you use the 33 trillion we printed to buy gold.
To buy gold.
You never have to be borrowing money from anybody.
And you wouldn't have the exchange rate at where it is today.
Yeah, we couldn't.
Maybe we should bring in Professor Ngu from Lagos end at this point, on this aspect of it, because we started off talking about the assessment. What's different from the self-assessment, which is fraught with all kinds of issues, and this assessment under the new law, which will be done by the taxman himself.
Very much, Syria. I think that also brings to the issue I talked about with regards to implementation. I mean, I totally agree and commend the President and the committee, the tax committee, for bringing out this bill. However, I have some reservations with regards to the issue of implementation, and also with regards to your specific question in terms of the taxman now telling you you are what. Of course, that creates room. And there is something that in sociology, in political economy, that they call social embeddedness, who we are and the way we do things in Nigeria. So let me use this analogy to explain what I'm trying to explain. A friend bought a land, and he paid all the dues with the local community leaders and all that, and then went ahead to get a CFO on that land. And after getting a CFO, he returned to the land to do a foundation. And the boys of the area came back and said, I have to settle the boys. And he flashed his CFO and said, I have a CFO signed by the governor of the state, and that means everything. I have a certificate of ownership. That means you have ownership of that land. And the thing dragged, and police were invited. And after some time, the DPO told my friend to say that it's better to talk with the boy so that this issue will not go like that. So at the end of the day, we have to talk to the boys, talk to the ballet, and had an agreement and settle the boys. Remember, you have a CFO. Remember, you've previously paid the community leaders. Now you are paying the boys for foundation. When after the foundation, the house came up, they came back again and said you have to settle them. You return back and they say, please go and settle the boys. All these payments being paid are tax. It might not be described as that, but it's tax, it's cost. The cost is increasing. So if, for instance, somebody comes and says, oh, Franklin, you are now worth 50 million. And I said, oh, I'm a professor. I think I'm worth 20 million or 10 million. What happens? We might have to end up going to court to confirm, or maybe if I disagree, as the case may be. If we go to court, it returns to the issue of what I'm talking about, the way and the level we are performing with regards to governance indicators, with regards to judiciary, rule of law, and all that. And of course, so there's a big issue with regards to the way these things will be done. And let me also point out that a key component to drive this tax administration will be technology. And of course, people will man the technology, people will ensure that technology is working. And how do we now ensure that that technology, as it's working in Lagos, so it's going to work in Zamfara, as it's working in Zamfara, so it's going to work in Bayelsa, and so it's going to work in Ebonyi or Ekiti State. So these are issues that we have to look into properly to ensure that we really achieve this. And if you remember, even if we pick agencies of the government and see and compare and contrast, when Dora Akunyili was in NAFDAC, NAFDAC was effective. When Malame Rufai was in Abuja, there are different views in terms of how he performed. When Mimiko was governor of Ondo State, there are also different views in terms of how he performed. So the question is human factor in execution of plans and strategies. And bringing it back to the social embeddedness of Nigeria is a big issue. Then also you now leave the state and now move to 774 local government that we have in Nigeria. Another complexity enters it. And when you also assess the capacity of our local governments in terms of the leaders of this local government, in terms of people who run this local government, across the 774 local government that we have, there's also an issue. So why the tax bills are, as I keep emphasizing, very good. We drive economic growth, we drive GDP, we'll make small and scale enterprises better off because they have more funds to retain, will help poor Nigerians in terms of their disposable income. We need to diligently re-examine the framework that will enable implementation, because it is very key. If the taxman comes to you and say, oh, you are now worth X, Y, Z, and you question it, you go to the tribunal, and the tribunal rules. Is there anywhere, maybe Kevin or Professor Waleke might clarify this? How do you proceed? Where do you appeal to? Do you now go to appeal court or higher? What is the higher authority that will look into it? And what is the duration to settle these issues? I mean, these are issues that we have to look into to ensure effective implementation, because other reforms that we've had in Nigeria cannot be said to be very, very effective in terms of implementation.
All right. And we'll certainly examine that aspect of it. But for now, we'll take a short break. When we return, we'll open the phone lines. Hopefully, we'll get in a few calls. And if we have the tweets also, we'll look at them. Stay with us on NTA Tuesday Live. We'll be back shortly.
The counsel of our fathers.
I will urge and advise our younger generation to use talent and brain to sort out problems, not arms.
Nigerian youths, let's build our nation.
My advice to these young people is please do not take us back to those harrowing days. You probably do not know what it is.
I believe we have fought one civil war too many in this country. So those who experience it will run away from it.
Nigerian youths, let's build our nation together.
NTA Tuesday Live, a network issue-oriented innovation talk show.
Thanks for staying with us. It's all about the tax reforms, the bills that have been signed into law by the president. And we're here with experts in the subject matter who are looking at the benefits of it to the Nigerian economy. This segment, of course, is when we open the phone lines. The numbers to call will be on your screen. You could take advantage of those and call in. As we always advise, you keep it short, straight to the point, and you turn down the volume of your TV set when your call gets through. We also encourage you not to worry too much about the greetings. A simple hello would do. So we expect to hear one or two opinions regarding the issues at stake. But before the break, we were on the subject of assessment, and Professor Ungu raised an issue where he said if the taxman assesses you and you believe it's not correct, you could go to the tribunal. After the tribunal's ruling, where do you go to? Is this where the ombudsman comes in, or what happens?
Okay, the tribunal, the tax appeal tribunal is like a court. It has the status of a court. So when you're dissatisfied with the ruling of the tax appeal tribunal, you take your case to the Federal High Court. From the Federal High Court up to the Supreme Court. So you follow the normal, normal judicial ladder. Yes, beginning with the tax appeal tribunal. So when you're dissatisfied, you can take your case to the Federal High Court.
Okay.
Yeah.
Well, the calls have started coming through. We have Monday calling in from Nasarawa. Hello, Monday. Go ahead.
Hello, good morning.
Yes.
Okay, I'm the professor advice at this moment that the president of science, listening to the last speaker, I think Hello?
Yes, go ahead. Go ahead.
Hello?
Go ahead, Monday.
Can you hear me, sir?
Yes, we can.
Hello? Okay, I think just as the professor talked about the presidential and the tax reform, and the last speaker really expands the horizon to other angles. Now, I am speaking as a boat and Uber driver. He talks about the categories of people that pay tax. Okay, that and the income between your income is around 800 and below, you don't pay tax. Now the question is this: every trip you take on board is tax deducted straight to the government. Every recharge card you recharge, this call I am making is tax deducted, and my income is not anywhere close to what he said.
So you're paying tax.
So how do you explain that the poor are not affected when we are paying, even if a trip is as low as 1,000 naira, it is tax deducted? How do you explain that? How do you convince me that this tax is going to put more money in the pockets of the small and medium term investors? I have a neighbor that sells yam. If she goes to Masaka market, whenever she's dropping her yam, tax people will come to collect tax. All of those things, how do you like manage all of this? Just like the last speaker talked about his friend who bought a land, paid this, paid that, paid this, and he expanded it into so many other angles. Please, Professor, can you help us out?
Okay. Thank you, Monday. Thank you, Monday. Great question.
Okay.
I'm going to take more questions.
Yes. Okay, maybe the way to approach this is this. The issue of 800,000 and below applies to payee, okay? Pay as you earn for employed, those in the, employed. So if you are in the employ of an organization and your salary is 800,000 naira, that is where you're exempted. So it is with respect to payee. It's not with respect to other forms of consumption. For example, when the call you're making, okay, is is a service consumption. So those ones are not part of this. What we're talking about. The marginal tax bracket is with respect to pay as you earn, the payee. And remember to, even for those who pay, before they eventually get to pay whatever they're expected to pay, they also enjoy some form of reliefs. Okay, so it's not applicable to the examples you cited. It's simply restricted to payee.
Okay, there's a question which I'd like to raise based on this explanation you've given, but I would first take this call from Umar from Birnin Kebi, and then I'll raise that matter. Umar, you're on. Go ahead.
Hello, good evening.
Good evening.
My name is Umar. I'm actually calling from the UK. Thank you, sir. The tax reform, I'm partially convinced, based on the explanation of the discussion there. I'm partially convinced, particularly where they say some people with low income are exempted. So I'm a federal civil servant. I'm concerned with the pay as you earn. And and one thing that worries me is that you design your team beautiful on paper, and it will remain on that paper for quite long period of time. That is to say, it will not be implemented. What assurance can you give us that it will be implemented the way it was designed in the paper? That's one question. Then the second question is that I was watching news, just 10 o'clock news by the channel It's in fact the lowest in Africa. And that has to do with the ease of doing business. The same ease of doing business in Nigeria is declining. And this is a result of federal government policy, like this tax reform. How do you react to this? Those are my two questions. Zero.
All right.
Thank you. May God continue to bless our country. Thank you.
Thank you, Umar.
I should continue?
Right.
Yes, you're very correct. What you had is correct. The tax to GDP ratio in Nigeria at about 10.08% is one of the least in sub-Saharan Africa. And you're also correct to say that part of the reason is as a result of, the ease of doing business in Nigeria. And that's also why these tax laws, the new tax laws, are justified, because the whole aim is to improve the ease of doing business by streamlining the multiplicity of taxes, that we have today. Formally, we talk about 60 different types of taxes. Informally, just as we have had, there are over 200. So one of the aims of the Nigerian Tax Act is to ensure that they are streamlined. Okay, so is there on paper? Yes, there is the issue of implementation. I don't expect that even when it takes off on 1st of January 2026, everything will be, we're going to get everything right same day, which is also why I think that even implementation is maybe phased. Okay, so, but the thing is that we have it on paper, we now have it as a law, and if you are earning an income that is under 800,000, and any particular state is saying you should pay tax, again, you have the court to go. Because pay as you earn, of course, we know is something that is collected by the states. If you're a civil servant, you're working, the place you pay your tax is the state where you're resident, your principal place of residence. So if any state is, any state internal revenue service is now assessing you, asking you to pay tax when it's obvious your pay slip is showing you're earning less than 800,000 naira, of course you can refuse to pay. And if you're harassed, that's where you now have this office of the tax ombudsman. I'm sure they're going to have offices in all the states of the federation. So, and that also speaks to the need for this, the points he made about sensitization awareness. People should know these things and know their rights, and know when their rights are being infringed upon, so that they can, and also know where to run to when these things happen.
Prof, I was just going to add that in the oil and gas sector, for example, there are 272 licenses and registrations that operators need to have. 272.
Different types.
So you can imagine the impact of multiplicity of taxes on the ease of doing business.
Okay, we'll return to you shortly, but we have another caller from Delta.
Okay.
Yes, just go ahead, introduce yourself and go ahead, please. And please turn down the volume of your TV set. I can hear the hurlback.
Hello. Yeah, good evening.
Yes, go ahead. Yes.
Okay. My take here is the community development levy. Most of the communities don't even have common boundaries.
Which one is community development? I'm sure she means development levy.
Yes.
Not community development.
Go ahead. Are you referring to the development levy, I suppose? Okay, that call, we lost the call, so... All right, so back here, the other issue I was going to raise from Professor Wadeke's explanation about the 800,000 naira applicable to pay as you earn. In the case of those who are not employed in the payroll of, say, the public service, for instance, where they earn less than 800,000, how are those assessed? People who are on their own who are self-employed, for instance.
That's the difference between self-assessment and the taxman gathering intelligence.
Okay, and so this,
so the banks, for example,
right, so
are required to disclose the financials of the
Exactly.
banks, of the customers.
Exactly.
Well, that's assuming that
they operate a bank account.
I operate a bank account.
Yes.
Exactly. So you know, the whole drive, for example, the government has with national identification number and bringing people into the formal financial system is also to widen the tax net. And like Prof said, also in instances where you can give out support to businesses, right? You have your data, they are able to see the performance for financial status. The government is not telling you to register to tell them that you need. They know, based on the intelligence they've gathered on you. So the whole essence of, you have a lot of self-employed people who are not, they don't have registered businesses, they don't have proper structures and framework, they don't report their tax returns.
So how do you assess them?
It's not self-assessment. The government is not waiting for you to come to tell them what you're worth or what you're earning. The government is gathering intelligence on based on what you're doing in the system. So yes, there's the gap of, so if you're not in the financial system, if you keep money under the bed, how will the government know? There is that gap. And it's not like the government is saying that, we have a perfect system where everyone who is not reporting tax returns formally, we can properly assess them through our intelligence gathering. But it's a journey that will take time from where it is right now to the ideal point where you can raise that tax to GDP ratio significantly and increase the revenue collections that the government gets to finance budget.
So any business person, one-man business that deals with cash, doesn't operate any bank account, is clearly outside it's not caught.
Okay.
Yes. Because only when you operate a bank account that the law now says you must have a tax identification card.
And the government doesn't need authority, doesn't need your approval to get intelligence
from the
on
banks.
what your banks are doing.
All right.
In fact,
yes,
let me
Prof.
just qualify one. It is true that our tax to GDP ratio is among the lowest in Africa, which has gone from 7% to about 10.5%. But that notwithstanding, we have the highest implicit tax in Africa, which means that a business will have to provide its own power.
Okay.
77% of the time, they have to use their own generator.
Okay, let me ask you to pause a while and see if we can get this call through. From Shuaibu, calling in from Abuja. Hello, Shuaibu, go ahead. Shuaibu.
Yes, thank you very much. Great.
Oh dear, another dropped call. Yes, Prof.
Yeah, so I was saying that we have the highest implicit tax because if you look at MAN on their website, employers, the manufacturers say that 77% of the time they are producing their own electricity. Then, of course, that's why all this Dangote thing is reaching them. Then you have the water. If the government can't give you water, you have to have a borehole or you have a stream. Then the road leading to your factory, you have to build it. So all the infrastructure that are expected to be delivered by the public sector are just not there. So the private business still has to provide all that. So that is a form of tax. And then, of course, inflation, high inflation is tax. Of course, it is tax. So when you look at all of that, you can begin to see why this tax reform is actually meeting them at their point of greatest need.
All right, we have a number of tweets. Let's see if we can take these ones. This one says, will this new tax reform really help ordinary Nigerians or just add to our daily burden? Of course, goes on to say, what protections are in place for small-scale entrepreneurs? And Another says, how can we be sure that the revenue from this new tax law won't just disappear into government pockets again? But I think one here that really, right, we would take this, and I'm sure that I guess here can respond to this. Does this law include clear guidelines for taxing digital earners?
Absolutely.
All right, so that's one of those. We'll take another call now. We have another caller on the line, and then we'll return to those tweets. Hello?
Yes.
Go ahead. Right, go ahead.
Hello.
Yeah, hello.
Hello?
Yes, go ahead.
Yeah, my name is Mr. Usman. I'm calling from Bida. So please, I have just two brief questions, sir.
Right.
One, I want to know, with this new tax reform, I want to know the composition of the board of FIRS. Because before now, the chairman of the FIRS doubled as the board chairman. I don't know if I'm correct.
Yes.
And secondly, before now, as the Prof rightly said, there are some taxes that are collected by custom, immigration, but now they will be collected by the FIRS. Now, is it that FIRS take over the primary roles of custom and immigration, or the revenue generated from these agencies will only be collected into FIRS accounts? Thank you very much, sir.
All right, thank you.
Okay, maybe I should. Well, the structure, the way I understand it, is that your first question, currently the chairman of the Federal Inland Revenue Service is also the chairman of the board, and also the chairman of the Joint Tax Board. Okay, Joint Tax Board, of course, as you know, comprises the heads of the Internal Revenue Service of all the states. So the chairman of FIRS is also the chairman of that Joint Tax Board. And they meet to resolve issues particularly to do with personal income tax. So right now the new law has the Joint Revenue Board. Okay, that one has further strengthened the Joint Tax Board and also expanded the scope of issues that they will now be dealing with, not just the personal income tax, but all manner of issues, all manner of taxes will now be dealt with under the Joint Revenue Board. Again, the chairman is the chairman of the Nigerian Revenue Service. Now, regarding collection, the whole idea is for the Nigerian Revenue Service to now collect those revenues hitherto collected by these other agencies. Customs, one of them. And again, the idea is to allow custom. The primary function of custom is not to collect revenue. The primary function of custom is trade facilitation, to facilitate trade, and then the border issues, things to do with border surveillance. That is for custom, not collection of revenue. So now the collection of revenue will be done by the Nigerian Revenue Service, ditto for NIMASA and the rest of them. So the collection will be done by Nigerian Revenue Service and not by these other agencies.
Okay. Yeah. So back to the tweet, which says, does it have clear guidelines for taxing digital earners? So
yes, it does. It does. The Act also under the there are four of them. The Nigerian Tax Administration Act has also specified that digital assets will now be taxed. So it's
does that include cryptocurrency?
Yes, even say digital assets, cryptocurrencies.
The SEC already has a regulatory standard for crypto platforms.
Yes, the Investment and Securities Act of 2025, the new one, has now brought every form of digital asset under SEC regulation. So the taxation of that will now also be done by the Revenue Service.
Okay. And, the other, still by the same Tonika Ume, who wonders, what's the government strategy for equity here? strategy for equity?
Equity is in terms of collection or in terms of deployment or applying the funds?
Right.
The equity is in terms of, in terms of collection, I have talked about equity with respect to personal income tax, how the rates are graduated. Mm-hmm. For companies' income tax too, in terms of equity, one of the things is that the exemption thresholds, the exemptions now for small and businesses that are paying tax.
That itself will talk about the exemption for small businesses.
Yes.
And
so it's being equitable because you are now moving the burden. But what is important to me too is equity in terms of the usage of the whatever funds that are generated. So I think that is what we should also now be speaking to.
Okay.
Now, when revenue is being generated, what should that money be used for?
All right. Yes. I'll ask you to pause. Let's get in Joseph from Edu. Joseph, who's calling in from Edu. Yes, Joseph.
Yeah, hello, good evening.
Good evening.
Yeah, please, I want to... Yes, good evening. I can hear you, sir. I really want to congratulate the President for what he did. I want to commend the President for what he did. This is a good step in making sure that our economy grows. But the thing is that these new reforms that he has done, so what he has signed into law, is it going to affect the life of a common man in Nigeria? Even those living in rural areas. Like somebody was talking about if they can do this into using the internet to be collecting the tax. Is it going to affect the rural areas? I believe there should be a system that should be done so that all citizens should be inclusive. I believe that what the president is a good idea, and I believe this thing that what he has said that do should have an effect for the common Nigerians.
Okay.
Thank you very much.
This question has recurred so many times.
Yes.
And it's important for our listeners to understand that inflation is unlegislated tax. There's a cost of living crisis in Nigeria today. A tin of milk is over 1,000 naira. 10 years ago, a tin of milk was less than 200 naira. A loaf of bread 10 years ago was less than 200 naira. A loaf of bread now is about 2,000 naira. So inflation is unlegislated tax. And one of the primary drivers of inflation was quantitative easing, which was the government trying to create money it didn't have to fund budget deficits. Between 2019 and 2022, CBN advanced the government 17.3 trillion because the CBN wasn't getting remittances from NNPC.
Correct.
Do balance of payment to the USD, and then the Naira paid to Consolidated Revenue Fund to fund budget. They were getting $3 billion a month 12 years ago. It reduced to less than $300 million. And they had to come up, they took public sector CRR, took private sector CRR. CRR cash reserve ratio, I explained earlier, went from 14%. It went to about 32%, 32.5.
Now 50%.
Yeah?
Now 50%.
Now 50%. The global benchmark for, as advised by Bank of International Settlements in Basel, is 15%, right? So when you don't generate enough revenue, the biggest problem here is on the macro. When you don't generate enough revenue, the government has to go to quantitative easing to get money to fund budgets. It automatically devalues your currency. It leads to inflation. Inflation will cause the central bank, the Monetary Policy Committee, to raise monetary policy rates because there's always an alignment of inflation to interest yield curve. It will increase the cost of loans. Yeah? The cost of loans will have an impact on the cost of goods. Right? So we need to understand that one of the biggest advantages of this tax reform, increasing the tax to GDP, tax to revenue to GDP ratio, is that it will decrease the burden the government has to tap into ways and means to fund budgets, and to stabilize the macro you need to ensure that inflation over a period of time, it's not going to happen immediately, begins to come down, because the biggest problem Nigerians have today is inflation.
And also reduce our over-reliance on oil revenue.
On oil revenue. That's the biggest problem Nigeria has, because inflation is unlegislated tax.
And maybe I should.
Professor Ife was talking about implied taxes.
Yes,
implicit taxes. And this is what we mean. So it's important for our audience to understand that the biggest problem they have today, the reason why everybody is crying, is because of inflation. And inflation is because of all the factors I mentioned. When you don't have enough revenue for government to fund its budget, and it has to go to QE, it leads to inflation, you increase interest rates, and you have all this cost of living crisis you have today. So when you have increased taxes and collections, and the government is able to do capital formation properly and rely less on debts, it will over time balance the macro in such a way that inflation will begin to tick down. Today, in the CPI basket, food takes 60%, energy takes 20%. In the CPI basket.
All right.
Let's get back to Lagos again. Professor Franklin Ungu, let's put this across to you. The reforms, how will it impact doing business in Nigeria? Somebody had raised that question before. But how would it impact the ease of doing business?
I think that generally the tax reforms will definitely enhance doing business in Nigeria, in the sense that SMEs will have more retained income or revenue. Of course, that means that they can also employ more people, productivity will go up. But the main issue is the clarity in terms of the tax required from them. So that clarity is very, of course, you know, in doing business, you have to be sure of what you're expected to do, the tax you're supposed to pay, how you're going to pay it. That is very, very, very important. And then even if you take it to big multinationals, the tax they're going to pay also will gradually reduce to 20-something%. That also will enable them to be sure that as the more they do, they know they have the clarity, they know what they're supposed to do, and of course, that will also enhance ease of doing business in Nigeria. And of course, the more we have more investors, there is also going to be more pressure from the investors, from the private sector, on the government to enhance further ease of doing business. But one thing I wanted to emphasize, which we didn't really comment on, is that one of the ways to also improve ease of doing business and also enable Nigerians to even believe in this tax is in the judicious utilization of the tax revenues. In the sense that at the end of the day, I mean, sometimes we discuss Nigeria as if to say everything will be held constant. Things are not held constant, even though economists most of the time say, oh, ceteris paribus. In this instance, all the revenues that we're going to generate, as Kevin was talking, there's something that he missed. The quantitative easing raised maybe about 17 trillion. However, we've been running deficit budgets all these years. Our record also show that in terms of implementation, we only implemented about 30%. So it means that we've been borrowing, and also that has also been increasing inflation. And that's also been increasing other things. But the question then is, if we get all this money from tax, what happens to the issue of corruption? Nigeria is still listed as among the top corrupt countries in the world. So it means that if we don't use these resources very well, Nigerians will not believe that what they are paying are being properly used. Of course, there will be rooms for circumventing the rules of not paying the tax and all that. So what I'm appealing is that when we're discussing these tax issues and other issues, even though they are very commendable, they must be discussed within the context called Nigeria. taking into consideration all the other factors of governance, other governance indicators, to now properly have a better understanding about its effectiveness and its impacts on Nigeria?
You're right, yes.
This question, very important question. The World Bank has 10 indicators on the ease of doing business. The two of them that hit this particular reform is multiple taxation, which we are tackling, but that's one. Then, of course, you have litigation that takes place, and which you've already got litigators, and then you've got the courts and the ombudsman that they're going to help. Then there is the other area, the basic one is construction. How long does it take you to register a title? How long does it take you to get obtain construction permit, and then litigation on title? Then I've talked about the how long does it take you to get to install electricity, formal one, and then telephone line. We don't need to have people get mobile in 10 minutes, but they're still using it to cut it down, to take us down. And then cross-border. How long, how many procedures are involved in border transfer, border transaction, going in and going out? How many transactions? How long does it take? And then what are the cost? So all these three for in and for out. But when you come to that, you see Ghana, it costs them about $7,000 to export 100 tons of cocoa. In Nigeria, $40,000. That doesn't tell you that we are ready for business, and that is tax. Do you know what I mean? So these are the things that, and of course there's treatment of minority stakeholders. That's one of them. So all of them, there are 10 that they use to measure. But of course also the fact that if you even come to the taxation area, the fact that we now, companies can see their tax go from 30% to 25%, and then in foreseeable future to 20%, and then the whole tax planning is clearer to investors. Because when you are doing your business plan, you need to project on what the tax, and you can't see how to project on the tax because you don't know what's going to hit you on the ground. But now people can see clearly, and then it helps people make investment decisions about Nigeria. Knowing what you can tax and what you cannot tax and where to go when you overtax me.
Yeah, please, let me make this point before time runs out. And that's to say that, yes, the primary aim of these reforms or the new tax laws is not to raise revenue. The government will always say that, but to, stimulate the economy, as I said, remove the tax burden from the vulnerable, move it to the rich. But ultimately, revenues will grow. Revenues will grow because the government is trying to plug loopholes. Revenue will grow because of this, the fact that a number of waivers are now, going to be removed. For example, the pioneer company Relief, has been replaced by the economic development incentive. Then you also have the case of multinationals, who have been avoiding tax all these years. The new tax laws, requires them now to pay a top-up tax. So once it is found that you're paying a tax that is below 15%, which is international, in line with the OECD, you'll be required to pay up to 15% because of the it has been established that a number of them, engage in, moving their profits to tax havens, what is known as a base erosion, profit shifting, and then shortchanging Nigeria. So the tax law says you must pay a top-up tax to make it over 15%. So ultimately revenues will grow. That's the point. Even in terms of penalties have been increased for the penalty for non-filing returns now has been increased to 100,000 naira, for the first 1 month, and then subsequent months 50,000 and so on. So we're going to have increase in revenues. Then the next stage, which I also think we should, which is the point I think Franklin mentioned, is important. That yes, we now have tax laws that are pro people, pro rights. We should also, on the other hand, be talking about the use of these revenues. Also ensure that they are also equitable. When we are using them, we ensure that they're equitable and fair and progressive. And how do we ensure that? Is to make sure that the increase in revenues that we're going to have will be used more for provision of public services. Channel to health, channel to education, channel to food. So people's rights to education, rights to health, and rights to food should be increased. as a result of this increase in revenue. So going forward, one should be able to see, for example, publications as to what the increase in revenue has financed. You see, that was the opportunity we missed when we removed fuel subsidy. Fuel subsidy removal, very good. The other one, unification of exchange rates, very good. Of course, they led to increase in government revenues. But what we mixed was, particularly for fuel subsidy removal, was to identify to what the savings or whatever, would have gone into. Okay, so that's the discussion. You should balance it. If you are doing a reform that will generate revenues, at the same time, you should also be identifying where the revenues should go.
And a very important point, sir, that we need to talk about is the size of government. You set up this good tax framework. It's fair, it's balanced, it's meets up with global best practice, it's modern, it's not a cake like it used to be. It moves from self-assessment to intelligence gathering. We need to talk about the size of government in Nigeria and the fact that there is a moral hazard of low trust in Nigeria. People don't trust the government. If the president is telling the people to tighten their belt, he needs to be seen to be tightening his belt too. So we need to move on to the fact that the Stephen Orasanye report, for example, that is the most comprehensive report to date, that has talked about how to reduce the size of government and has gone through several white paper reviews since 2010, 2011. The SGF and the presidency needs to pay attention to it and needs to implement it.
And just to add to this, what Prof has said, it removes the discretion from governors and president by now saying, don't do it. If you have to, go to the National Assembly. Then for the governor, State Assembly. So he's roped them in. So all that discretion to waive tax and then to remit tax, all that stuff is now, the jury is out on those. So that's very, very important. Because there was a time where half of the revenue government would normally get actually goes to waivers and the concession, all that stuff. Almost half, half of it.
Yes.
And then also, they have actually removed it from anything and everything and now focused it more on the real sector and other stuff. And then if you come to agriculture, someone was talking about rural people. They removed things from agriculture and agribusiness. In the rural area, forget it. If that's what you're doing, you're covered. And then, of course, the military.
Well, on a general note, so many questions have been raised, and the fact that the laws will go into effect on the 1st of January gives this window, which Prof has talked about, for massive enlightenment. One wonders how much has been done by the authorities concerned to spread the message. The issue here is still with small businesses. I'd like to return to those who are exempted from paying tax. And my worry here is, like you had identified, quite a huge number of businesses that are outside financial system. How you assess those businesses and effectively decide that they don't pay tax.
So I think the intention is not even to make them pay tax. Yes, those small, that's why they're exempted in the first instance. It's not to make them pay tax. It's just for the intention is for the government to have their data, to also support them to grow. Okay, because the idea is when they now grow and come into the tax net, they are in a position to contribute to government revenues. So for now, if a business is small, is still struggling, below 50 million. Yes, below 50 million, I had is they moved it to 100 million. So the government, is not intending to, tax, such businesses. So those businesses are exempt from tax. As I said, the whole idea is the government recognizes that those businesses are struggling, and they need to be supported, to grow. So all that the government is asking those businesses to do is to, file returns. In other words, they'll be encouraged to, have small records that they can file, so the government can have their data. They are not expected to pay tax.
A lot of this will depend on, as you did mention, a lot of it would be digital.
Yes.
it would also depend on the level Nigeria has attained in the new world. Already, there are huge challenges to deal with banking and the question of access to cash. Now, businesses will be filing returns, and we expect that the electronic traffic, someone mentioned here that Nigeria is third in the world when it comes to that. Prof, it was you?
Yes.
But the system is still, to a large extent, erratic. I don't want to go back to a few days ago where there was a...
down,
yes, almost down. Now, how will this affect all of this? This efficiency in the system?
Yeah.
So this is not, the beginning from January 2026 is not like...
El Dorado.
Uhuru.
There is always like a period of transition.
Yes.
It's going to take time because, you know, the unbanked population is still anywhere around 45 to 48% in Nigeria. And, you know, you have these payment service banks and microfinance banks and this digital age electronic banking platforms that don't have full banking license, you know, but have neobanks, right? You know, the CBN has stricter regulations for disclosures of their customers on KYC, for example, you know. So it's a process that requires integration from the Central Bank of Nigeria, from tax authorities, and from Nigerian Financial Intelligence Unit, and even to the other stakeholders in the system, Nigerian Identification Management Company, NIMC. It will require a framework for integration, but it's a process that will take a period of time to graduate people and bring them into the system.
All right. We just got a few minutes left of the program, so we'll begin to take the closing comments. Let me start off with Professor Ungu in our Lagos studio. With
I think my closing statement, Cyril, will be that the tax bill or the tax reform is a highly welcomed and commendable reform. It's been long expected, and we need it in Nigeria. However, I think one of the ways to encourage people to pay tax and to comply, not only to pay tax, but to comply with the rules and regulations in any country is actually on the effectiveness of government to do the right thing and do things properly. In the sense of when Nigerians see that the taxes being paid are judiciously being used, prudently being used for the sustainable and inclusive development of Nigeria, even compliance rate will go up, cost of administration will go down, and it will also induce more participation in the formal economy from those who are in the informal, and will also increase investment, growth of SMEs, more FDIs will come in, and of course there's something that they call associational economy will definitely be engineered in Nigeria. So my appeal or my advocacy is for the government that the ball stops with the government. And when I say government, I'm talking about the federal government, the state government, and then how they can also incorporate the local government to improve government effectiveness. If they can do that, in addition to other governance indicators, as I say, rule of law, regulatory quality, control of corruption, voice and accountability, and all that, you will see that trying to enforce these tax reforms or other reforms will be a lot easier. So it's with the government to do the right thing, and Nigerians will definitely comply, collaborate, and support the government.
All right, thank you very much, Professor Franklin Nemeka Ungu, economist, chartered risk manager, and professor of strategic management and governance at the Lagos Business School. Thank you for sharing your thoughts with us. Thank you. All right. Back here in the Abuja studio, Professor Ken Ife.
Yeah, it's a good bill, but as you know, the devil is always in the implementation, and I think the implementation should link much more effectively to the Fiscal Responsibility Act that actually governs the public finance management. Then we know that we are talking. At the moment, I'm not confident that we are complying with the terms of that act, especially as it opens the door to state governments and also to local governments.
Professor Wale.
Yeah, thank you. I think it's a good thing we now have a tax system you can describe as modern, you can describe as progressive and fair. On the other hand, I would like to see the revenues that will be coming from these tax laws, better channeled, possibly earmarked. There's no doubt that the Federation will have more money, as a result. Talking about more money from, if you have increase in companies' income tax, for example, of course, that will impact the Federation account revenue. So both the federal and states and local governments are going to have more money, going forward. Because when you even increase tax to GDP from 10.8 to 18% ultimately, which is the target, of course, that means more money, for all the tiers of the government. And for me, I would like to see that money, go into the improvement of human rights, the right to food, in particular education, health. Let the money be earmarked, for provision of, public services.
Right. Well, Kelvin Emmanuel, you did mention that so much attention has been focused on the tax aspect of it, forgetting that the committee also, did a lot in terms of fiscal policy. Well, that might be understandable. It's a universal thing. It's not a Nigerian thing. The tax man is usually vilified. Everyone hates the tax man. So it's understandable that attention was mostly on tax. Yes. Will we pay more tax? Will the tax be used for what it is intended to, and all of that? Yes. But as you close, let's hear from your end how all this will impact Nigeria's economy generally.
I think this is the most consequential reforms we've had till date. I'll say that. It's the most consequential reforms we've had till date. It's going to solve over time, not immediately, not in 12 or 24, 36 months.
Right.
The issue of capital formation and revenue for budgets. But I also want to commend the chairman of the committee, because the last 2 years has been very testing. It requires someone who had patience, who is humble, who is experienced to manage the pressure and, patiently explain to stakeholders across board. His leadership has been remarkable and incredible. And I would want to encourage Mr. President to give him more responsibility and promote him.
All right.
Because he's really done well.
Thank you.
Okay. All right. On that note, we'd like to thank you for your contributions. And thank you, too, to all those who called in, who sent in tweets, and for all who have stayed with us until this point in time. Next week, we'll be back with NTA Tuesday Live. I'm Cyril Stober. Bye for now.